so hard to beat the market?
I don't think it is hard to beat the market. Why it's been hard over the last 5 years to beat the market is because you've had extraordinary times. You think about the 5 or 6 years since 2009. What have we seen? We have seen an unprecedented amount of stimulus by central banks and other support mechanisms being introduced, which have boosted share prices and essentially has meant that every significant market correction since 2009 has, broadly speaking, been a clear buying opportunity. And what this does, it compresses and changes the composition of index returns. And as a consequence, index fund investors have done very well. Momentum investors have generally done quite well. And what it means is that the average active fund manager has struggled. And guess what that means? It means that newspapers or consultants or the like extrapolate that and say it's difficult to beat the market. Personally, I think if you take it over a longer time period, it isn't difficult to beat the market. But what you've got to do is you've got to have passion and continued interest, or perhaps a little bit of luck, in order to focus your portfolios on companies that are making and changing and continuing evolving. Because investment is not static. So I think it is possible to beat the market, but you've just got to make sure you're attuned to current conditions and keep on working with a passion to find those corporate investments or underlying investments which actually allow you to do that. And the last 5 or 6 years, market composition and the mix of markets have been difficult for the average active investor to do that. But here's the good news, I think that's changing. And I think the next 5 or 6 years you'll see a reversion to the more normal and typical backdrop where if you have that passion, that discipline, that application, that enthusiasm, you will be able to beat the markets.